What's up? I'm Dan Fredenberg, and this is another Chance Encounter. I'm joined today with Tom Kirkpatrick. How you doing today, Tom?
Doing great, Dan. Thank you.
Awesome, awesome. I'm really stoked today too because I've got my favorite audience member watching today. And why is my favorite audience member watching? It's because this is a chance encounter where I interview commercial real estate investors. And why do I do that? Well, part of it is because we have to. But the bigger thing is we need to be compliant. We need to know, hey, how do our businesses fit in with each other? And what better way to do that than knowing the guests' core competencies, motivations, appetite for risk, and all that sort of stuff. So I go through the 5 different motivations, and then I pull out the Dan Does Deals commercial roll die. You can get your own copy of that with the 6 different main roles in a commercial deal. And so that way you can learn how to effectively communicate on the subject of commercial real estate by going to dandoesdeals.com, downloading and printing out your own one for free. I don't even ask for your email address. But Tom, before we get too excited, can you introduce yourself to the audience, please?
Yes, I'm Tom Kirkpatrick. I live in East Tennessee, outside of Knoxville, Tennessee. I have a W-2, but my real passion and my focus in my own hours is as a general partner in multifamily syndications. I'm currently involved in 2 of those as a general partner. And then as a limited partner, I'm also invested in 3 other multifamily deals and looking to diversify my limited partnerships maybe into some other spaces. I've got a family business that does flips. My wife kind of mostly handles that. And I've got 3 grown kids. And my goal really is with the multifamily is to replace my income of my W-2 to let me live the life that I'm meant to live.
I love it. I love it. So you've already got some of the motivation in there that you've listed off, and that's what I go through first in these, just to make sure that we're on the same page. So these 5 different motivations, one of the issues I've found is when I interview a newbie, they'll know why they're doing it, but they won't necessarily know what role they'll have. So this is a nice warm up. The first motivation I found for commercial investors to make their next acquisition is to preserve their purchasing power. So those who already have a pile of wealth or assets that do have cash flow coming from them, what they're going to be doing is they're going to be concerned about inflation eating away at that purchasing power, and the only cure is to make more acquisitions. So that's why some people end up making acquisitions all the time. That's not my primary motivation. My one is trading time directly for wealth. My background is in tech. I used to work for a CRM company, and then I ended up creating an agency for CRM integrations and websites and for all those online sales, mass marketing, all that sort of stuff. But the problem of making money in the form of salary or wages is you're paying more income tax than any other way to get income. So I put on my hat and thought, maybe I should pivot into something where I get to keep most of it. So that's what I'm up to. But the most frequently chosen answer for why people are doing commercial real estate is because they're trying to take control of their time. Maybe it's fast tracking retirement, but the biggest thing is they want to gear down a little bit. Maybe work fewer months per year, or fewer weeks per month, or fewer hours per week. Who knows what it is? But the idea is to tone it down a little bit. Whereas the next 2 groups, they're never going to gear down. The first group, they're so ambitious, they want to buy their entire hometown. They're looking for the generational wealth. They want to make sure that their great grandchildren never have to hold a day job. And so that's why they keep on pushing and pushing to make more acquisitions. They're great people because they'll keep on moving. Also, the last group, they'll keep on moving, but their motivation is maybe they've chosen a sector of society, or maybe it's the environment or animals, or who knows what cause it is. But they realize that financially, getting on your feet and having assets and wealth, it's the most effective vehicle to make a real big impact on society. And so that's the fifth motivation I found. So of those five, Tom, what resonates with you? What combination of them best describes you?
There's probably three. So the first one is the time for wealth. Certainly want to get away from the W-2, get away from the high taxation. I have actually two cost segregation studies coming in that I'm able to apply about $40,000 in losses to my income last year. So that's great. Those just came in. So I'm working in that direction. The next, that's part of it. The fast tracking retirement, it's not really fast track because I'm 62 years old. So I've missed the boat on fast tracking anything, but the goal is to replace the income, not necessarily to retire, because I'm kind of a guy that's always wanting to do something, and I like the investing. So that then that kind of, the idea is to replace the wealth. And then maybe the last one of, helping, getting to the point where I have some time to actually give back a little bit. Right now I got a full-time job and I'm pursuing the investing in the multifamily. It doesn't leave me a lot of time to go out and build houses with Habitat. And maybe, I am involved in a foundation here in my community. So I try to do what I can, but that's the goal, is to free up some time for friends, family, and maybe helping some other people out too.
All right, beautiful. So let's go on to the core competencies and the contribution. I always start this off, and just so you know, I always go right from zero, just because I want to make sure that you can communicate effectively on the topic of commercial real estate. And again, you can print out your own Dan Does Deals Die and show it to your friends and family or whatever. And then that way you really have it locked. But it's also important to me that you not only understand the business as a whole, but also how my guest fits in. So let's go through these. The first one is the repositioner. The repositioner looks at a bunch of different properties. They're doing the paperwork. They're looking at the actual buildings. Why are they doing that? Well, they're looking for upside. So the first thing they have to do is, when a seller makes an offer, they turn around and say, oh, okay, I'll give you this amount or something like that. First thing they need to do is it's a fancy word, they need to underwrite the deal, which means they're just doing the math. They're doing the arithmetic. They're finding out, is this business actually making the amount that the seller says it is? Are there any opportunities where they can make some changes? In other words, reposition the property so it makes more money than it is right now. That's what's going through the repositioner's mind. And the main tools that the repositioner has in their tool belt to find those upsides, the first one is more efficient operations. You get fewer of those Benjamins going down the toilet, but of course there's more than just unclogging toilets. There's also a marketing piece, which is one of my fortes, which is making sure that your vacancy rate stays low. There's also some automation, there's bookkeeping, there's many different parts to operations themselves. But unfortunately, right now, real estate's so hot, that's probably not going to be enough. So the repositioner might get a contractor team to do a value add or the renovations. The purpose then is, if the units are actually nicer, then people will pay more in rent to lease out those units, and they'll be happy to do so. But if you are a repositioner and you're from the internet like me, you've got a great big problem, which is you're going to need a local. You're going to need boots on the ground, somebody who can be there in an hour or two, which is not going to be me. And if you put all these people in a row here and you turn around to the tenants and say, hey, who are those people? They'll say, oh, those are the owners. But of course, it's not that simple. The other spot that the repositioner gets their upside, it might be through more advantageous lending. They go to financiers, they go to the banks, they go to the fund managers, and they say, hey, what kind of loan terms can you get? And if they can get a better deal on the money, then they can do better than the current owners. But the financiers going to look at the deal and all this team and all that sort of stuff, and they're going to have one question on their mind that I haven't answered yet. They're going to say, okay, but who's your sponsor? Who's your KP? And what's that all about? Well, the answer is, if you want to be eligible for a loan, you have to have somebody in the fold who already owns a similar asset. So if you're looking at like a 150 unit apartment complex or a 350 unit apartment complex, something like that, even if you're Elon Musk or Jeff Bezos or Bill Gates, if you want a loan, you have to have somebody who already owns a similar asset. There are a couple other requirements. One is you need a certain amount of liquidity, and then the other thing is you need a balance sheet of at least the amount of the loan. But if you got all those pieces, you got yourself a commercial real estate deal. So Tom, as far as contributions to a commercial deal, what are you most likely to add?
I guess I fall under the repositioner. What I've found after chasing deals for a few years now, I bought my first complex in 2016, but really I like finding the deals, and actually the two deals that I've found and closed on I've actually gotten seller financing. So it was the process of finding the deal, developing the relationship directly with the seller in both of those cases. In one case, over 4 years to close on a 34-unit apartment complex. So it's finding the deals, doing the preliminary underwriting. If it's, I'm still not the best underwriter. So then the other part that I do is I really like finding the deals, developing relationships with the brokers, and then building a team to find people who have better qualities or qualities that maybe that I don't have. Maybe somebody who's a better underwriter, maybe somebody who knows that market a little bit better than me. And then I guess another aspect of it is local. Both the properties I ended up buying are like within a mile and a half from my house. So I am the kind of a local boots on the ground guy. I'm not doing much of the operations. I've got property management companies, so it's more asset management level, overseeing that. So a little bit on each of these. I'm not a sponsor. I'm not quite at that point yet. Some of those others, but that's kind of where I want to get better at it too, is on the finding deals, networking with brokers, and doing the preliminary underwriting and responding quick enough, and then team building with a GP team.
Beautiful, beautiful. All right. So my next question then would be the ideal property. You mentioned that local aspect, and just so you know, when commercial investors are asking each other about a buy box or an ideal property, they're really looking for three main things. The first one is the geography. Where is it? Okay. What state is it in? What county is it in? What neighborhood is it in? All of these could matter. Okay. Second one is the unit count. We're talking about commercial real estate. So if it's not industrial and it's not warehousing, then you're going to have a unit count. It doesn't matter if it's multifamily, self-storage, or mobile home parks, or RV parks, anything like that. You're going to have a unit count that's going to be a real sweet spot. Now the third one is called class, and unfortunately they use the same word for two different things, and they use the same rating system for both of them. So the first one is the condition of the actual building. Is it beat up? Is it immaculate? Is it fit for a king, so to speak? So if it's fit for a king, it'd be an AA plus. Whereas if it's like a war zone, it might be like a D. C is a little bit more average working class, and then B class is a little bit better than that. The other meaning of class is the neighborhood that it's in. So that means how close is it to good school districts? What's the crime rate like? Those are the main things that people are looking for. So Tom, as far as a deal that's easier to say yes to and more difficult to say no to, can you describe that, please?
Yes, sir. Yeah, what I've been kind of describing to the brokers is I'm focused, and my team are focused primarily on geographically a band from Knoxville to Lexington, Kentucky to Cincinnati to Columbus, Ohio. That's our band right there. So we're really trying to hone in on that. Looking primarily at 70 to 90 units right now. I started with 13. I went to 34, trying to kind of keep doubling that. So next one, we're looking at 70 to 90, and hopefully after that, we're going to be looking at 150 to 200, something like that. That doesn't mean we don't look at other properties, but if you can give something that the broker can think of you when it comes across his desk, that's what you're trying to do. So maybe 70 to 90 units, B plus to C plus to B minus, probably, that kind of range. And that unit count, we've also been looking at some properties in Orlando and Tampa. And in that particular market, we're probably more focused on, 12 to 40 units, because the price per unit down there is just really ridiculous. There's a lot of money coming in from all over the place. So it varies a little bit based on the market, but my core area right now is the one, as I was saying, let's see, class, And then, of course, we definitely look at market conditions. The building, we like 1980 or newer. Okay, we're not really interested in black iron pipe and galvanized pipe, so try to get away from those. So that's kind of our primary focus.
Sweet, sweet. And so the next question, one of my favorite things about commercial real estate in general is just because it's multifaceted, there's a bunch of different people with very different jobs and skill sets. We all tend to be very well suited to help a lot of different people. And that's not always the case in a lot of industries, but we're also better suited to help some people more than others. Me personally, because my background is in marketing and tech, if you want to work with me, you kind of have to have some systems and something going on, or else I think you're kind of overpaying. But the sponsors and KPs are who I tend to be able to help more than others. What about you, Tom? If you could get more of people without breaking any SEC restrictions, so no enticing investors if you got a 506B deal on the go, but could you please describe the person who you're better suited to help?
Yeah, our most recent deal was 506C, so I'm free to speak freely, I suppose.
Yes, you are.
But yeah, I mean, definitely help professionals. You know, I'm looking to help professionals diversify. I work in an engineering world in my day job, so like to be able to help those people diversify out of the stock market. That's one group of people. So I feel strongly. I've diversified a lot of my money into multifamily and other assets. I'm looking at some land deals now just to try to get something else a little more stable. And so it can help those people. And then also, though, helping in, as I said, I like the team build. So with this last deal, we put together a group of 6 GPs, and 2 of the guys had no experience as GPs, and really we didn't necessarily need them on the team per se, but I'd been working with them for a year and a half looking at deals. They weren't the ones I brought on the team that really knew the market and were able to really help me with the underwriting and the rent, what the rent comps might be. So, but I did bring them on the deal because, I wanted to help them further. That was their goal, was to be a GP. And so hopefully we get them on board, and maybe we can do it all again sometime.
I love that, because there really is that big chicken or the egg problem when it comes to getting your first deal. So giving people a chance is really, really huge. So, but if somebody wants to reach out to you, we ended up meeting through George Roberts III, and in his meetups, I met him through other meetups that I found through LinkedIn. Is LinkedIn a great way to reach you, or is there a website that's better? What's the best way?
LinkedIn's great. I try to do, I've got most of my multifamily focuses in LinkedIn, along with all my engineering contacts. LinkedIn's good. HorizonMultifamily.com is our website. Feel free to check that out. Tom@HorizonMultifamily.com. Another good way to get me.
All right, beautiful. So the only thing I have left, it's actually for you, it's not for Tom. I need to draw your attention to below my left hand. If you're on a phone, you'll see these red letters, and they don't look good at all. And on a desktop, it's a big, the ugliest red button you're ever gonna see. And I gotta tell you, there's a really easy way to get rid of that terrible red button. All you do is you click on it and it turns gray. The gray one, you gotta see the gray one. The gray one's amazing, and it has a special power. It means that YouTube pays for these videos instead of me. So you want to do that, right? Because it's amazing. It's totally free, doesn't ask for your credit card, email address, any of that silliness. And all it means is that my videos might show up on your list of suggestions, but you can go ahead and ignore them because you've already done me an enormous favor by watching this, and especially if you hit the button, just like Tom has done me an enormous favor by meeting up with me today. Thanks a lot, Tom. This has been really awesome.
Thank you, Dan.
Sweet. Hey, I'm Dan Friedenberg, and if you are trying to get people to invest in your business, there's a good chance you're breaking the law. I have 506B to make sure that you're in compliance with 506B requirements. Most importantly is that you have a prior substantive relationship. how do you prove you have a prior substantive relationship? I know that a CRM isn't going to work. So what I did is I set up a system for me and my friends where I have these videos where we establish, for commercial real estate investment at least, what our core competencies are, what our motivations are, our appetite for risk, and all those sorts of important questions. So you'll be able to figure out our levels of sophistication. And then that way, I think that that's as good as you're going to get, and it's easy to document. So even if a judge completely hates your guts, I think they'll still be able to accept that they knew you and you knew them, so it wasn't a public solicitation. You don't always have time to give people your appetite for risk, your level of sophistication and whatnot. Who knows? It's probably a busy conference where they're busy trying to sell you some crap instead. So what do? You make sure you have your 506B code, you've got that bookmarked, your own profile page. Then if somebody opens up the QR code scanner that's in their phone already, they can scan it just like this, and then that adds it, when they open it in their browser, it adds that to their 506B watch list. So when they get back to the hotel room or back home, they can binge watch through everybody's profile videos so that they know who they met. So 506B after this. Thanks. Bye.